Five, four, three, two, one, zero.
Hi, everybody, and welcome back to yet another cracking installment of the Matt Brown Show. This is the Built in New York series, where, as if you've been following, congratulations, you need an award. If you haven't been, welcome. But our next guest is none other than Manish Bhatt. He is the founder, or co-founder rather, and CEO of HelloPlum.com. Manish, welcome to the show.
Thank you. Thank you very much. Happy to be here.
No, it's great that you're here. So listen, you've got a very interesting background. I've had a chance to meet you and really learn about what you guys are doing and how you're kind of changing, your customers' world. But for our viewers around the world, Manish, you haven't had that privilege. Why don't you give us the bit about the origin story of Hello Plum and how this whole thing came about?
Yeah, absolutely. Hello Plum is our website name. The company's name is Plum Life. So it's a little bit disconnect there, but we like Hello Plum. It's very friendly and approachable, which is really what we're trying to do with insurance, right? We're trying to make it much more friendly and approachable than it has been for the last 200 years, let's say. We're a bunch of co-founders. There's four of us, and we've been in the insurance industry 20 plus years. And we've been making trouble for 20 plus years. But we've never been happy with the way technology works. It's still a very paper-based industry. Technology is poor. And what Plum Life does is it brings a lot of modern tools. We like to think of Plum Life as kind of like the Shopify for life insurance agents. We give them a platform to help them have a modern, effective digital business in today's world. Where clients don't necessarily want agents to come into their households anymore, but they still need that advice and help.
So fantastic. So it's life insurance. Life insurance has kind of been seen as like a grudge purchase. And it's like I'm paying money. It's like car insurance. It's because it's like it could happen,
Yeah.
And I'm interested to maybe double click on what you said there around like it hasn't really changed too much. Like it's always been a grudge purchase. It's always been pretty paper based. It's always been the way that it's been for so long, and the companies in the insurance space are massive. Like this better than anyone. Farmers Insurance, these sorts of companies, they're absolutely huge. And so I'm curious to maybe double click on the idea of like innovation in insurance in the insurance industry. Why hasn't it innovated to the extent that you guys have innovated?
Yeah, it's a great question. I mean, we used to ask that all the time, and then we just decided to do it ourselves rather than to figure out why these big companies. Because I spent 20 years at MetLife, kind of trying to push that snowball uphill, or whatever the expression is. But I think it has to do with just it's a very careful industry, right? So the industry doesn't like to make mistakes because they're making promises. Certainly in life insurance, we're saying, hey, we're going to give you this policy where if you die, we're going to pay you $500,000. We're going to pay you $1 million. We're going to pay you several $1 million. And so it's an industry built around kind of avoiding risk, even though that's what they do. And I think that just permeates the culture. And so nobody wants to take a chance. Nobody wants to make a mistake. And I think that's been a big reason why these large companies just haven't changed very much. And to your point, it is still a grudge purchase, right? Certainly life insurance, even more than auto insurance. Nobody wants to think about, passing away. Nobody wants to think about that. And that's why agents are so important. They get a bit of a bad reputation, but we think of them as the heroes because they're the ones out there making sure families are protected.
So how big is this industry? I mean, one of the numbers that you told me about was like $12 billion of life insurance is sold every year. That's a big number.
Yeah.
What else do we need to know about the size of the opportunity here?
Yeah, there's over 12 billion every year being sold, and there's also over 400,000 licensed life insurance agents in the U.S. So that's a lot of people. It's one of the biggest professions out there. So it's pretty massive in that regard. So if you think about just how much is being sold and by who it's being sold by, of of that premium, almost all of that is being sold by those 400,000 agents. People don't really buy it directly. And some companies in the last 5-6 years have tried to get into that space, and it has been with mixed efficacy at best.
Okay, cool. So who's your customer here? Is it the consumer who is looking to buy insurance? Is it the intermediary channel? Like, walk us through who the customer is. Who are you trying to solve or add value to?
Yeah, that's a great question. I mean, our first and foremost customer is the agent, who's trying to help his customers or her customers get insurance. So that's the way we think of it. We do keep that end customer in mind because we want them to be happy too. We want them to enjoy both the relationship with their advisor and also their relationship with the companies that are actually making the promises of insurance. But first and foremost, it's that life insurance agent. That's our primary customer.
And what have you built solutions wise for them, or what's the problem there? I mean, if there's 400,000 brokers, let's just say, in the US, like what's keeping them up at night?
Yeah, it's a couple things, right? I mean, the first thing is that their life is very difficult, right? I mean, this is a job where, if you look at the movies or something, life insurance agents aren't always portrayed as like, firefighters and policemen, right? They're portrayed as the people you want to avoid. Groundhog Day comes to mind. I don't know if you've seen that movie, but Bill Murray has a life insurance agent friend that's always hassling them. So they're dealing with that perception. They're dealing with a lot of rejection from clients that hang up on them or don't want to hear from them. So it's a tough job. And then on top of that, the industry, the life insurance companies have given them the worst technology there is. I mean, if you're a life insurance agent, you're using 6 or 7 different systems with poor functionality, poor reliability to do your job, which I just told you was really hard to start with. So that's the problem we solve, is we kind of make that part of their life a lot easier. It's an easy, simple platform that they can interact with their clients and get everything done in one place. Right now, if you're not working with Plum Life, you're going to 5 or 6 different places, 5 or 6 different passwords and different ways of doing things. With Plum Life, it's all one platform. So that's the biggest thing. There's also another thing that has really emerged in the last 3-4 years with COVID, which is life insurance agents went from kind of sitting in someone's house and making a sale, which, it's hard to get in the house, but once you get in the house, you make the sale, to doing it all digitally now. Nobody wants anyone in their house anymore. And so they're doing it like this on a Zoom session if they're lucky, but more often than not, it's just phone calls and email. And as if you're anything like me, when I see a phone number I don't recognize, I don't answer. So their lives have become much more difficult. And that's where Plum Life comes in. We give them a platform that allows them to not only work digitally with their clients, but we help them nurture. We have a lot of analytics and machine learning in the back end that, if I'm trying to work with Matt, I'm going to be more effective if I use the Plum platform, because I'm going to talk to Matt at the right time with the right message.
Mm-hmm. So how does it actually work? So let's just say I'm Matt Brown, the broker, for instance. So I want to sell insurance in the Denver area, for instance. Like at what point do I engage with you? And like, how do you actually help me do a better job at managing leads and,
Great question. Yeah. So if you're Matt Brown in the Denver area, the first thing you do is you go to helloplum.com and you sign up, and it's literally takes 5 minutes. You have your life insurance license. So you give us that information. Very simple process. We get you appointed with your carrier, and we also give you a dashboard with a bunch of tools. So we'll give you a dashboard that allows you to run quotes. We'll give you your own personal life insurance landing page that you can use in your social media. You could put in the comments section down below here. You could put it anywhere you want, on Instagram, Facebook. When at any time one of your clients goes there, they will see, you'll put up your picture, you'll write a blurb, maybe you'll put your Calendly link on there. And so now you're already become digital. And anytime anyone uses that credit will go to you. You'll be informed, hey, somebody just started an application. So there's those tools. Also, if you do put a lead in there, let's say you have a list of 100 clients that you think are good for life insurance, you can upload them. We'll send them out a marketing piece that you select or one that we recommend. And then we'll also nurture that client, right? So, maybe they don't open the first email. Maybe they open the third email. Maybe they start the application but don't finish. We'll not only reach out to that client, but we'll text you and say, hey, Matt, your client just started the application but didn't finish. This is the best time to call them. Click here. And these are things, that agents need to do now in a post-COVID world. In the past, it was just, let me get into the house and finish it, right? And now I need that help.
So Manish, basically what it sounds like is an end-to-end insurance enablement platform that allows brokers or insurance brokers to sell remotely. Would that be a nice summation?
Yes. I don't know why I didn't start with that, but that's a great way to put it. That's why you're good at this.
I know exactly right. So that's why I'm here. That's why I have a day job, dude. Yeah. I'm in the summation business. Yeah. So, what success have you had? I mean, what kind of numbers are you seeing from your broker base?
Yeah. We try to be a little careful, but we're happy to share some numbers. So we launched literally 1 year and a couple of weeks ago, and we started with 7 agents, and we now have over 3,300 agents, and just every day more and more agents are signing up. We're seeing hundreds and hundreds every month. So that's one of our big success stories and something we're very, very proud of. I think another success story is the agents on the platform love it. Our NPS is well into the 60s, which is a net promoter score. So it's how many people give you an 8, 9, or 10, versus how many give you a 0, 1, 2, 3, 4. So we have a very high net promoter score, and the revenues, sales. We don't like to talk too much about that, but there's millions of dollars of business flowing through the platform. So those are the things we're most proud of: is how many agents are signing up and how strongly they tell us they love the platform.
And that's the customer's only truth, right? Exactly. At the end of the day. So what I would love to talk about a bit more around some of the founder stuff for other founders out there. So it's someone once said to me, it was Howard Sackstein, also a very successful entrepreneur, and he said, you know what? People who are sitting in corporate jobs, if they can't figure out what they want to do, and we're talking about corporate people becoming entrepreneurs, which is what you guys have done. Yeah. And he was like, if they can't figure out what makes them happy, they must learn to be happy in their misery. And it was a very interesting point, because it's kind of like you guys are in your 40s. This is it's your first real startup that's hit some kind of, success. And so it's an interesting conversation for me to have, because most of the guys I talk to have founded multiple companies and or they're young or whatever the case might be. And so what's your advice or what have you learned basically about the process of going from a corporate person who wasn't exactly fulfilled into this startup because it's worlds apart, right?
Yep. Yeah, I think a couple things that come to mind. One of the things that I always knew to be true, and I got it from my father, is whether you think you can or you think you can't, you're right. So that's kind of one of the first things is if you believe you can do it, that's prerequisite. If you don't think you can do it, don't do it, because you're going to be right either way. So I think that's a big lesson that people should have, right? If they feel like they can do it, that's probably, to me, almost enough to do it. But if you're hesitant, then really, listen to that too and figure out why. The other thing is don't take other people's assessments. I'll tell you this one story. So I'd left Life in 2014, and I wanted to do a startup. I had this great idea, and I never did the the VC thing. And I met with one VC in New York City. He loved the idea. He said it was great. And he could really see them backing it, but I'm a corporate guy. I'm going to start this, and within a year, I'm going to get a job offer and leave it behind. And so he wasn't going to invest in me. So I could have let that hold me back, but I just said, whatever. That's one guy's opinion. And it is that was 2014, so it's almost 9 years later now. I'm still doing this, so I'm happy he was wrong. But I think, don't let other people, tell you what you can or can't do. If don't let people tell you fit into certain mold and you have to be 25 and sleep and stay up all night working. Don't buy into any of that.
Yeah, it's interesting. I had this conversation with another founder, Frank Arellano, who runs Revolve. Like they've got a whole bunch of champagne problems, like scaling beyond belief.
Yeah, right.
And he was like, I've got investors, I've got advisors, I got feedback from customers, and I said to him like, how do you actually decide like which advice to heed and which advice to ignore? To your point, it's like, well,
Yep.
everybody has an opinion. And I've found that if you have too many opinions, you kind of lose your sense of your own opinion and what you feel intuitively is the best solution or strategy or decision to make in a particular context.
Yeah.
And so I'm curious, what role has intuition played? Obviously, intuition was, I would imagine, like quite a big driver in you starting this business in the first place. And now you're obviously doing, multiples in millions per year in ARR. So, what role has intuition played in your success?
Yeah. A huge role, right? Because like you said, there's so many different opinions out there. We have, multiple investors and we have, other advisors and of course we have big business partners that are using the platform that think you should, hey, I love your platform. You really should do X, Y, and Z. To me, actually, the more opinions we get, actually, it makes it easier for me and for our team because the more opinions we have, the more it's like, well, I can't possibly follow all of them, so let's just do what we think is right. And that's that comes back to the intuition. I would say intuition, for me is just kind of code for like experience. Like I've done this a long time and I've recognized things. Intuition is just kind of like an unconscious recognition of a past experience manifesting itself forward, if that makes any sense. But I think it's huge. You have to do what you think it's right. Not to mention, right, if you're going to get something wrong, I'd rather be my thing than someone else's thing.
Mm-hmm. So, quickly on funding, you guys closed a $5.3 million funding round back in March. Curious to have a discussion with you about funding in the current market. You're obviously going to probably go into another raise sometime next year.
Yep.
Startups are always raising money. And so I have this as an ongoing segment about raising capital. So, like, what have you learned? I mean, you were raising money when the market wasn't exactly booming.
Yeah.
Like, what did you learn about raising money in the market the way that it is right now?
Yeah, I think what I learned is, first of all, like you said, you have to always be marketing, yourself and your company. That's everybody says it, but it's like it's so true. You have to constantly be reaching out to people, constantly be telling your story, so that when the time does come, you're not like starting from scratch and figuring out where things are. So that's one thing I knew, but I know more than ever. Um, it's interesting for me. Like we started raising money before kind of everything went difficult. Um, I haven't noticed a difference in the ability to connect with VCs and to tell our pitch, to hear their interest. So to me, I haven't really experienced, quote unquote, a downturn yet. I'm looking to see what will happen next year where we're going to raise. But one thing we're doing very much is we're not waiting until we need to raise to have conversations. We have a pretty long list of people that we've told our story to twice. We've told it once, we've given them an update. We'll do another update at the end of the year. And they seem to like that. And it keeps it kind of fresh in their mind. Obviously, it's important that each of those updates is better than the last. So it's a little bit risky, right, in some senses, because you're kind of telling them where you've been, so they expect you to go further. What we don't do is we don't tell them, where we need to be for the next round, right? We're a little bit, we keep that close.
So, how do you know how much to raise? So, do you raise to hit a certain number?
Yeah, I think for us, it comes down to the what are we going to do with the money, right? And so we and how fast we want to grow. So for us, it's a little bit of an equation. It's mathematical more than it is art. It's more science. It's, hey, here's where we are. This is what we need to grow in sales. This is what we need to grow in profit margin. It's going to take these 8 initiatives and these types of employees and this type of, maybe third party expense. And that's how we get to a number. And then of course, cushion, because whatever you think it is, it's going to be more. Right.
And
just like, yeah.
I mean, I'm curious, like obviously valuations aren't necessarily going to be what they were unless you Jasper.ai. So, how caught up should a startup founder be on valuation? Like if you were getting, I don't know, let's just say a 10x multiple, now you're getting a 6x for the same thing. You also have the luxury of saying no.
Right. I mean, you have the luxury of saying no unless you're going to run out of cash, right? But I don't know. I don't get too caught up in valuation. I mean, especially if it's your first one, right? Like this is our first one. It's like, it's more important to be successful and get a good exit, I think, than it is how much the valuation was, and did you end up with 14% instead of 11% or 11% instead of 8%, right? Because then you build credibility, and I think it just makes it much better the second time around if you're planning a second and third time. I know you've done like 87 of them, right?
Thank you, Manish. I didn't want anyone to know, but now the cat's out the bag.
I think it was 14. You said, I forget. What
yeah,
it was. It was a lot.
I started 14, but
14.
right.
Yeah,
I've sold 2. Like the rest were all like dun.
Yeah.
Yeah,
but now that you've had 2, I mean, I think people look at you differently, right? I mean,
well, Steve Blank said to me the other day, he says, what we have, he said to me, I was trying to not mess this up, but he's like, in Silicon Valley, we have a word for a startup founder whose business failed. And I'm like, yeah, what's that word? And he was like, experienced.
That's a good one.
Yeah, and it was an interesting point, right? Because I use this acronym QBE, so like qualified by experience. Like there's no book that's going to teach you what I know about building a business. You know what I mean? Unless I write some version of that, and I don't have time. I got like 3 books I want to write, but I don't have time to do it. And so just to maybe stay with this idea of exiting, right? Because if I think. I don't know, like I think failure teaches you more than success does in many cases. And I've learned in the process of 25 years of building businesses, like I've learned what type of founder I am. You get one-hit wonders. My mentor, he owns like hundreds of businesses. And he was telling me the story about this one entrepreneur, and he built this business and the stars aligned, and he just sold this thing for like billions, right? He was minted. And 2 years later, he met my mentor for coffee, walks into his boardroom, sits down, and this guy's just like depressed. And my mentor said to him, he says like, dude, like, why are you depressed? And he said, maybe not in these words, but what he said to him was that he finally realized that he's a one-hit wonder. He doesn't. Well, this is legit. People don't think about what happens after the exit. And I interviewed Bo Burlingham, who literally wrote the book on this. It's called Finish Big. Like when you exit a business, or a founder who's sold a business, like 80 or 90% of them go into some form of depression, because while they're rich or whatever, like they don't think about what that next move is. And so when they exit the business, they're no longer in control. They become an employee overnight, and suddenly things suck. They've lost their sense of meaning and purpose. And so we often don't think about exiting until it's almost too late. You know what I mean?
Right.
Or it happens out of surprise, and I'm not really prepared. I haven't got my due diligence documents in place, or maybe I haven't built the thing to sell. It's not ready. It's not a sellable asset just yet. Maybe you haven't done, you haven't documented things, or the numbers don't make sense, or the story's not right. You've had a bad quarter or 2 bad quarters, and that affects valuation. So there's lots of things that go in there, but I'm curious to get your view, because you touched on the word exit. When do you start thinking about it? Because do you think about it like when you hit 5 million ARR, or do you start thinking about it from day one?
Yeah. I mean, I honestly, I I think about it all the time in the sense that I'd like our business to be clean, right? And so I don't want to have to scramble for things because when we went through that second fundraise, everything was pretty buttoned up and it was awesome. And so we try to keep things buttoned up. So from that regard, I kind of keep it in mind. But in terms of actually exiting, I don't think about like, hey, are we ready yet? Now we're just not there, and I don't know when we're going to be there, honestly. I think if you're worried about that, it might lead you astray. At least in the stage we're in. It's just let's focus on making this business successful. There's a favorite quote of mine from Viktor Frankl. I don't know if you heard of him.
Yeah,
He was in the concentration camps, but he said, success like happiness is something you can never pursue. It's something that results from doing things. It's not something you aim for. It's something that happens. And I always like that. So let's, we can try to keep focused on just making this business better every day. And then, when it's time, the exit will come. We'll know.
Yeah. So question about partnerships, because you touched on it before. You're working with some partners. Who are you working with in terms of strategic partnerships, and what or how much has that contributed to your ability to scale?
Oh, it's been huge. I mean, some of our strategic partnerships are reinsurance companies, as well as carriers. Our carrier, we have a few carriers. One of our best carriers is SBLI, Massachusetts. And so them having a lot of resources and experience has made it easy for us. There's a lot we don't have to focus on because as a partner, they do so much. So without that, I think it would be very difficult, especially in the insurance industry, right? I mean, there's a lot of barriers to entry if you wanted to do everything yourself. You do need partners. And I think you find that a lot of the insurtechs have some type of partners.
Mm-hmm. Do you find that corporates are open to working with startups, especially when it comes to innovative-led startups? So, I use the analogy of dinosaurs trying to climb trees. It's like you can try and build it yourself, right? And you can try and create an innovation lab and say you're innovating and, try and suffer, then try and navigate and avoid the corporate inertia and the antibodies of innovation. Because everybody likes to change. They don't actually want to change. Hence why they're a dinosaur that can't climb a tree. So they like to talk about the tree and how beautiful it looks. And we could be like that, but then they practically they can't actually get there. Or they could, but there's 1,000 other projects, and it's just I got other priorities. I got shareholders, and actually, we'll just keep talking about innovation and get another speaker in to tell us how amazing we could be. So
I think you hit something. There's one of my mentors used to always say, when all is said and done, more is usually said than done. And I think that describes, the insurance industry pretty well. I think they've gone through stages though. If you ask me 10 years ago, most large insurance companies were all about, hey, we need to innovate. Let's create an innovation lab. Let's create a separate team. Let's do that. And I think now many, if not most insurance companies actually have parts of their organizations dedicated to working with insurtechs. And to some extent, it's almost like I wouldn't say given up, but they've accepted that the insurtechs will move faster, quicker. And they need, their goal is now, how do I work with them? Not how do I do what they do? Which is great for us, right? Because, as an insurtech, it just makes it easier to have conversations. So we find it very, inviting space to have conversations with large carriers. Now, execution is another story, because to your point, they've got 50 projects and a limited IT budget and a limited IT bandwidth. And it's always like, well, we can't do anything quickly, which is, quickly for them is less than a year. Which, for a startup quickly is like a month.
It's a day.
So,
it's a day.
It's a day.
What are you talking about?
Right, exactly. Good point.
Yeah, it's a day, bro.
Yeah.
Never confuse a short line of sight for a short distance, right?
Fair point.
Yeah. So you mentioned the word scale. So curious about what it means to you to scale responsibly, because and especially when you're on this funding hype cycle thing, it's like, cool, we must just keep raising money and, we think we're at product market fit, and we think we know the unit economics, and sometimes you don't. Sometimes you raise money, you put $1 into the engine, and you still get $1 out or less. You haven't quite figured it out. You're not quite there yet, even though your run rate's going in the right direction. And so anyway, so you're raising money to scale, and I think there's good growth and there's bad growth. And I'm curious to get your view, Manish, on what does it mean to scale responsibly?
Yeah, I think scaling is one of the hardest parts of this journey that I found, especially from early days. And I'm talking like first year or so, where you do so much with brute force. It's like, here's an opportunity. We want to get it because we want to grow, so we'll figure out a way to do it, even though it's not a repeatable way. So we've done a lot of things that have, like, okay, now that we have volume, that's just killing us. I still have weekends doing things. I'm like, I can't believe I'm doing this. Like, we've got to figure out how to scale this, so to speak. So for me, scaling responsibly it's finding that balance between kind of growing because you need to grow and growing because it's a good business decision in the long run. That's been the challenge. There's so many opportunities where if I said, hey, in the long run, is this sustainable? No, we should probably not do it. And yet, at least early on, and to some extent, even now, we're going to do it anyways. So it's scaling responsibly is really being disciplined about that, or starting to get more disciplined about what you do the hard way versus what you do the right way. If that makes sense.
It does. Yeah. Just very quickly about your team. There's obviously 4 of you. It's interesting because it's like you have one founder or 2, but rarely do you have 4. How do you govern decision making? Like, you know what I mean? Like, is it consensus driven amongst multiple founders like that? Like, how do you because often, like, how do you accommodate differing opinions? Obviously, no, it's not just 2; it's twice that amount.
Yeah, absolutely. It's a lot of arguing. It's a lot of arguing, and we're also into the business that it almost feels personal at times because we're so passionate. But at the end of the day, it's really majority opinion. But we always let everybody be heard. We always kind of get everybody's opinion. But we're not consensus. That's not what we're trying to get to. Although I would say 95% of what we do ends up being everybody's on board. And then 5% of the time it's like majority opinion. And, I don't think we've ever been 50-50 split. If we are, I think I'm the tiebreaker. So
yeah, it's my opinion, dude. Like, I'm done. We're going there. I hear you, but no, I don't. We're not doing it. Okay. Yeah, no, that's cool. So I mean, so you're obviously a visionary, and you're kind of solving something that's really valuable within the insurance sector. So I'm curious to ask you this: like, what is your vision for this business? Like, what is the contribution at the end of the day that you're looking to see within this broker channel?
Yeah, I mean, I'm just looking for agents to feel empowered about their lives and their businesses. I mean, at the end of the day, that's how we measure success. Is the agents using our platform, do they feel like they have a business partner that's aligned with them, that's trying to make them more successful? That's what we're focused on. I said it before, I'll say it again. Agents are the heroes of this business. I mean, without agents, it would be a huge problem out there. People, just think about how many people unexpectedly passed away during COVID, and how important the role of life insurance was to keeping families in their homes and on some sort of routine. And that wouldn't happen if agents weren't doing what they're doing. So to me, that's what we're really trying to do is build value for them, make them feel like they have a partner. Because, for a long time, it's their lives are so adversarial. They're constantly dealing with rejection and people being rude to them. That's really what motivates me and us and our team.
So Manish, want to have a bit of fun with you. So I'm going to give you the keys to the Matt Brown Show time machine.
Okay.
And I'd love for you to go back to day one, like when you and your other 3 co-founders were like, "Hey man, let's quit our shit and let's get on with something that's going to mean something to the world." So if you could go back to that day, and you could, what advice would you maybe not to your co-founders, but what advice would you give to yourself, about building Plum Life?
Yeah, I think it's the thing I've learned that I would tell myself is it's going to be a lot more work than you think. And to make sure you're ready, because it's the most work I've ever done, and you have to really be prepared for that and have a good support network. Like that's one of the good things is having 4 co-founders. Like, there's always at least 1 or 2 of us that are in a much better place than the other 2 to lift them up. So be ready for the tough work and have a support network, someone that can lift you up that says, hey, this is going to be huge. I know we had a setback here, or this month wasn't as good as last month. Maybe this whole business doesn't make sense. Like you're having these exaggerated doubts, right? It's to have a good support network.
Yeah, I get that. It's more like a stock market graph. Everyone seems, a lot of people, like, especially from the outside, like if you're sitting in corporate going, hey, I've got this ambition to start a business one day, and then you like read TechCrunch and you're like, oh, look, it must be a hockey stick graph, like cool, startup, 6 months, I'm rich. I mean, but meanwhile, it's one of these up and down situations. So, so Manish, let's wrap this up, man. Like, why do you do what you do? Like, what gets you out of bed in the morning?
Yeah, for me, it's about making other people's lives easier. That's what gets me. I'm in the insurance industry, so it's nothing inherently exciting about it except for what we do, which is really to change people's lives. You know what I mean? At the end of the day, that's what insurance does. I mean, not the day they buy it or during the whole sales process, but that one day it's going to be there and it's going to make a difference. And that's what gets me up in the morning. That's where I find the meaning. It's like, being part of something that's bigger than myself.
Manish, it's been a real privilege having you here, buddy. I think it's interesting to have like an older founder team. I think that's really exciting. And, insurance is a massive industry and it does impact people's lives. So, I wish you well in the future and looking forward to all the the additional success that you guys are going to achieve as a team.
Great. Appreciate that. It's been a pleasure speaking with you. Thank you.
Anytime. Thanks, Manish. Thanks, everyone. Ciao, ciao.